Countdown's on to Wednesday's interest rate announcement from the Federal Reserve. Let's bring in Roger Ferguson, former Fed vice chairman, as well as a CNBC contributor. Since last time you were on, and I think it was just last week, Roger, we have seen Fed futures at least move up a little bit on the possibility of a 50 basis point cut. What do you think's behind that thinking, Roger, that maybe it would do no harm, 25 is not enough, maybe there is a little weakness that we're seeing, might as well get started a little more quickly?
Well, look, I think there are a number of things behind the thinking. First, the movement to roughly 50-50 on Friday was driven by some newspaper reporting, and so there's sort of information out there. When one thinks about the underlying rationale for it, I've heard a number of people say they're going to have to cut several times. Why not front load it and get started earlier? There's also, though, something that worries me a little bit in that narrative, the notion that maybe the economy is a little weaker than it appears, and this is an insurance policy. Last time we talked, there was some discussion that you and I had about, well, gee, is the economy actually weaker than it appears? I fear that if they move 50 basis points, the notion that they know something that we don't know, as they say, i.e. the economy is weaker than we think, will start to take hold, and I think that's not an accurate narrative. So it's 50-50 right now. Either way, we'll see what happens. You
don't think that the stock market response factors into to Jay Powell's thinking whatsoever? Because I would think if it's 25, that might be disappointing to people. Wow, we'd really like 50, and then if it was 50, that also might be taken negatively because of what you just mentioned. So if they're worried about the market reaction, I don't think they can win here.
I agree with you completely. I absolutely am sure that I would imagine that they would prefer to see the initial move be sort of neutral to slightly positive in the market. And right now, I think they're set up, as you just articulated very well, for whatever decision they make, there'll be someone disappointed in the market and the possibility of a sell-off. So, I don't think this 50-50 odds for either 25 or 50 is a net positive. It gives them room to move 50 if they want to, but then it creates a communication challenge to explain why that 50 move was not a sign of increased concern. Or to the other side, if they only go 25, why shouldn't people be disappointed?
Wasn't the inflation data pretty friendly, Roger? It sort of gives them some room to go 50, doesn't it?
I think some of the inflation data, the headline CPI number that we saw and the PPI number, were both relatively friendly, not dramatically so, but consistent with the narrative. What I saw that worried me a little bit, and I think we may have talked about this last week, is the so-called core that includes housing in two different measures was still above 3%. And if one is focused on the core numbers, because it strips out, volatile food and energy, you can still say there's a move in the right direction. I'm not sure you can say, because it's not yet at a 2 handle, that, there's an all clear. So I would, either way would not surprise me, 25 or 50 basis points. I would think 25 basis points might be a bit more prudent to make sure that the core number, including housing, starts to come down closer to that 2% number that we're looking for.
I guess we're getting used to cross currents in the economy, Roger. Another notable one today that I saw in the Journal, and the top story was the strong performance of the economy puts the Fed in an unusual territory of actually orchestrating a soft landing similar to 1995. So that's the first one. Then 2 stories down, warnings from bank executives that Americans are struggling to keep up with their bills has set off alarms on Wall Street. So is that, it's a strong economy? Are people just overextending? Is it strong? Why are people struggling to keep up with their bills? Or are they, I don't know. How do you explain that? Strong economy and yet well, first, go ahead.
Look, first, it's a very large and complicated economy, right? And if you zero in on any one part of it, you could, as we are now, getting mixed stories. So I think both things are true. Yes, the economy is strong. The most recent GDP Now reports, forecasts that come from the Atlanta Fed, the New York Fed, and a few others, all show the economy growing roughly at potential. The most recent, if you look at initial claims continuing on a 4-month rolling average, roughly 200,000, which is in the state of normal growth. And yes, there are certainly pockets of the economy that are more vulnerable, partially because interest rates are higher, and partially because at least lower income individuals don't have as much exposure to equities and may not have exposure to other assets that have been helpful to the rest of the economy. So we should always expect contradictory messages in an economy this large and complicated. But the Fed shouldn't take its eye off the bigger picture, which is an economy that's growing roughly at potential. Inflation coming down towards its 2% target, creating greater confidence. Yes, it is time to move out of restrictive territory. And the final point I'd make is, the market would get very excited about 25 or 50 basis points. In the scheme of things, where the Fed's probably going to be moving, 1.75, maybe 2%, whether they get started 25 or 50 doesn't really change the strategic narrative. And so while we're having this discussion, the bigger picture is solid economy, odds of a soft landing going up, which is to be recognized. And so fingers crossed, whatever they do, that they achieve that soft landing, which I think has become, at this stage, hopefully more likely than not.
So is it 50-50, Roger? Tell me what it's going to be. I'm going to go out on a limb. 50 basis or 25?
You're going to push me. Well, let me be very clear. As I said, I wouldn't be surprised by either one because the 50 basis points is in play. If I were voting, I would vote for 25 basis points because I think the economy's in pretty solid shape. I don't want to create this narrative that we know the Fed knows something the rest of the economy doesn't know, the market doesn't know. And if it turns out, I don't think, but if it turns out that they feel a little pressure later because markets are weakening, they can go 50 when that becomes clear. So for me, I won't be surprised either way. Personally, I think wisdom would be on the side of 25 basis points, but there's smart, credible people who are going to argue the other side as well.
Okay.
I like that. They could go either way, but if they're wise, they would do what I would do.
Right. Exactly.
I'm with you, Roger. I agree.
Becky, I'm trying to be diplomatic here.